think we're okay. Well, it's March 27th, Thursday evening. Thanks for joining everybody. And I want to talk about something that comes up on calls. When it comes up on calls, I talk with clients on these subjects, and I figured it would be useful. And I've covered segments of this that I'm going to present to you. And I actually made myself some notes. So sometimes I usually don't do that, but I just wanted to make sure I cover a few principles to share with you. And so we're going to get into what it means to invest, what that really means, and how investments are normally done. Because I think we all have it backwards, or I used to have it backwards. Now I understand. I want to share this with you. So my investment that I started many years ago is now expressed as aceofcoins.club, aceofcoins.com. So if you want to check that out, the .club site is my video membership. So when I have content that is specific to solving problems, which is what I like to do, I make a series of videos or one or two videos or whatever's gonna give people the understanding. And sometimes I put the documents with it, but I also make myself available so that if there's something that's not there, but maybe it's partially there, you can ask me, and sometimes I'll just have a dedicated call with you I'll do a video call, and then we can record it, and it gives me more content, or I just give it to you. And so I also provide that as well. But I do the one-on-one consulting. So people make the mistake when they go to aceofcoins.com, they see that it looks like I'm selling LLCs, and I'm not. I'm using them as part of the whole process where I'm consulting with people. Hey there, Ray. So the aceofcoins.com is there to access me for consulting and get on my calendar. And what I don't really tell people, sometimes I'm deliberate, but sometimes I just don't market myself a certain way where I should. But just know that when you schedule time with me and you pay for the call, that includes a follow-up call or two or three. Okay. It also includes if I talk about something on the call that might be a solution for you, I will do the thing. All right. It takes me maybe a half hour of my time or something, then I'll do it. So it's not just I'm talking to you for 45 minutes, So anyways, that's how I set that up. And then I have these Thursday evening calls, and I try to cover subjects that I think are going to benefit y'all. So this evening I wanted to talk about, the title is, it's going to be like this. I'm going to publish this on YouTube. It's going to be asset allocation strategies. Gosh, that sounds so dry, boring. Asset allocation strategies. So I added in there cash flow, private equity.
Do you know what the uh, letters of that are?
Yeah. The first letter. Yeah.
Sorry.
That's good. That's good. No, that's a good. I could have rearranged it now that you mentioned that. I could have, come up with some other diabolical name.
Yes.
But anyway, so in investing, so this is perfect because I was talking to a gentleman today. I don't think he's on the call. Maybe he can't make it, but he wanted to make sure I was recording this because he wants to hear it later. But we had the same conversation. He sends me a text message, an older client, and he says, "Hey, can you recommend any safe investments?" I love those questions. Somebody has to asked me we were doing the presentation on Go Baby Trade the other day, and this one woman, I think it was a woman, asked about how can you get how can I have a stable income from this? And the way she asked the question basically made it look like you're not looking for an investment. You're just looking for a grant from somebody, So I said, that's what you're describing there is if I could answer your question, then we're not talking about an investment, because understand that investment is where there's financial risk that someone is going to take. And that's the definition of an investment. Let's say, for example, I have a restaurant and it's doing well. There's no problem with it. And maybe it serves my business model or opportunity at the time to take on some liquidity, meaning that maybe a partner can come in and take an equity share of my restaurant, my company, for X amount of dollars, right? And so what this allows me to do is get some cash, have some liquidity, and then do something else that might make more money. Well, in selling part of the ownership of the company to somebody else for some cash, I'm actually managing the risk I have. It's like if I own 100% of the company, I have all the risk, right? But I also have all the rewards from what I'm doing. Hopefully I'm doing it well and I'm making money, but I still have 100% of the risk, right? But if I bring in somebody else's money where he got that money from somewhere else and I don't care about it, and he puts it into my company, he's going to get rewarded at the rate of return I've been producing, hopefully, or better. Okay. But that means he now has taken on some risk, and you have to have risk to have an investment. So just understand it's the nature of what you're doing to have, you're not, don't, you can't, you can feel safe, but this is not what you're trying to do. You're trying to make money work for you. And that means you might lose some sleep at night until you try, somewhat get used to it. So, and so let me just share with you some ideas. So here's an idea. If you think about where you went today, you probably went to the grocery store and some other places, retail businesses. We go all over the place. You probably drove by some apartment complexes and a hotel and whatnot, and ask yourself, who owns those things? Chances are some corporation, probably a bunch of people somewhere else in another country, maybe another state, maybe it's a franchise, maybe it's local people that live in your neighborhood that own the restaurant or something, okay? Well, if you start looking at the books and records, you'll find out to be successful, to be competitive, these investments, these businesses that enrich our lives, that make things convenient for us, give us comforts and benefits, these are investments that are not always made by the owner from his own money or the company itself. Many times the money for the investment is truly from another party who doesn't care about the restaurant. All it cares about is the paper, the return on capital, right? So most investments that make our lives better are investments from not the owners and operators of the businesses that are around us that make our lives better. It's other people's money. So when people ask me, what investments can I get into? And I'm with you guys. I'm kind of the same thing where I'm always thinking, where do I accumulate my cash and then put it into some investment? And there's not a problem with that. It's just understand what you're doing. So most investments are made with other people's money. Just keep that in mind. And you can take your cash and put it into an investment. I'll give you an example. I could take, let's say I have $1 million and I just buy like I don't know, maybe I'm just going to make up something here, like a small hotel, right? I don't know what you can get for $1 million, but I get a hotel, right? And I put all the money into the hotel, and now it's my hotel and I'm the 100% owner and I have all my cash in there. And let's say it's doing really well. Let's say I'm getting a really good return on my money. Let's say I'm getting like 28%. Okay, that's pretty good. And what that does is it makes me, here's why. There's another one right across the street, same model, same similar pricing, but that was acquired with, let's say, loan money. My hotel that I own was acquired with my money that I got from somewhere. It doesn't matter where, but I care about that $1 million because I'm personally connected to it, right? But the competitor across the street got his money from somebody who doesn't care about the actual operation. He just cares about the money he put in there and the return on capital. So there's not an emotional attachment, you see. But what's more important is, let's just say in the example of the competitor who's using other people's money compared with me, where I'm using my money, it makes me the lender by default, because I could be using lender money to buy the hotel, or I could be using lender money to refinance my interest in the hotel and get my cash out, or most of it, right? But I haven't done that. Now, here's the difference. If I'm my own lender by default, because I own everything and I don't have financing, but the competitor has financing, who has more risk? Who has more bad risk? Who's higher risk? It's me,
Yeah.
right? I'd rather risk someone else's money. That's not being deceitful. That's practical. That's how things are done. So a lender in this example is somebody who has, let's say, who qualifies the loan and who has underwriting rules, okay, criteria by which the loan is given. And those rules are a trade secret. They were acquired over a long period of time. It's a very special thing. And that lender can call up another lender and borrow money to compensate, to recover the cash from the money he just lent to the restaurant or the hotel. You can't do that. You don't know anybody. You're not a lender. You can't call up another lender and say, hey, I own this hotel. Can you let me? Nope, you got to go through the whole underwriting process because you're the consumer, is how they look at it. So you have more risk if you're using your money and you're not a lender. You're acting as a lender, but you're not. Does that make sense? You guys can just chime in. I'm,
Mhm.
you know how I am. So that's kind of the principle you want to look at. Now, okay, I'm all for taking my cash and put it into something, but at the same time, when I put it into something, whether it's intellectual property, real estate, maybe it's a batch of contracts, something, it needs to be bankable. It needs to be something to where I put my cash into it and then I can I can show it. It appears on my balance sheet. It's bankable. It's something that can be collateralized is really what I want to say. So why would I do that? Because I might put my cash in there for convenience. Maybe it's easier that way, right? And then I need to make sure the books look good and I have something that can be collateralized. And then I'm going to go to a lender in a short period of time and I'm going to borrow my cash out, most of it. That's how I'm going to manage my risk. First is I'm going to do it with financing. It's a way you manage risk. How do you get financing when you, let's say you buy a retail operation? Well, the books have to look good. It has to be a good investment, right? Why'd you buy it in the first place? Well, hopefully you bought something that's bankable. You're right. That's the other thing too, is when you get into an investment, and I'm gonna give you a few examples of what that is. You should look at it in terms of, do you have the ability to sell? Would someone else buy it from you today? Or can you place it in a position where it's going to be a pretty good asset to sell in the near future? That's how I look at things. Is it something that someone else would buy for me? Or can I make it that? You know, I mean, you might buy something at a pretty good discount because you might have access to certain suppliers. You can make the thing look better. Whatever it is, it could be real estate, it could be an actual business, it could be a website that has inventory where you're looking at the marketing aspects of the website and you're saying, well, they're not even taking advantage of those other niche markets out there. I could just buy up that business right now and I could triple its income because I understand how to do the merchandising. You see? And so that, if you can come in there and make the books look better, now it's bankable. So that's how you work an investment. But so in investment, just keep in mind, you want to get the thing that's going to be the asset. And I'm going to get into a couple of examples here so that you can manage the risk later because you are taking some risk. And thankfully, you want to be able to take the risk. This is the question I like to ask a lot of people. Like today, well, I can't use that example, but my question I like to ask people is, like when they ask me, like today, that the one gentleman, he was asking about, can you recommend a safe investment? So my first question to him is, what investments do you already have? So I'm talking to, and this is me too. I'm not trying to be insulting. I'm just saying I'm talking to a baby, okay, figuratively. So you have to look at it that way. If you've not made an investment, now I'm not talking about your house. That's not your investment. It's someone else's. Your car also is not your investment. It's somebody else's. You're a baby if you haven't made an investment. And a 401k is not your investment. It's someone else gambling with your money. So you can get a tax break long time from now. So anyways, so the question I like to ask is, what have you been investing in? And what would you do with $1 million? So that triggers this question. If you are asking me, John, do you have any ideas on investing? My question to you is, do you have any ideas? Have you even thought of what that is? I have ideas. You're paying me to tell you that, but have you thought of it? Do you have an idea? No, you haven't even given it one thought. What would you do with $1 million? So the next question I have is, what would you do with $10 million? Does anybody want to take a stab at answering that question? I have 3-word response to that always. Spend it fast. Spend it fast. You have $1 million, you need to spend it quickly. So how would I do that without wasting it? Because I can go to the casinos, right? I'm not talking about that, Hailing. I'm not talking about that, as you know, although that might be fun for about 30 minutes. It depends on what you're doing. But if you want to spend it fast, right? Well, you can't spend it if you don't already have a list of prospective things to buy. Where to put the money? Well, you should always have that. You should always be thinking, like, a lot of people are thinking we should be shopping for our family. We should be shopping for a bigger house because the kids are getting bigger or whatever. We're having more children or whatever. We should be shopping for a new car. That's how most of us think. We're not thinking about what would I do with $1 million or what would I do with $10 million? Yeah, I'd buy the hotel down the street. With $10 million, you can buy a $25 million hotel. With $1 million, you can buy, a $10 million hotel, for example. You don't need all the money. You just need something to get started with, okay? So spend it fast, but you need to be smart about it. Have a list of what you could possibly get into. So where do we start with that? We go back and think, what is my professional background? So you might think, okay, a store manager at a grocery store. What's his professional background? Store manager at a grocery store. Who's 32 years old, store manager. And so what would he possibly, my recommendation is, if you're going to invest in something, invest in what you know or what you could know, or partner with someone who has some expertise in the area where you can get up to speed on the investment. Invest in what you know. Invest in if you're already running a business, maybe invest in your suppliers. So if I'm talking to a 32-year-old store manager of a grocery store, what is he exposed to on a regular basis?
People's food buying habits,
Inventory.
inventory, yeah, and like what they like.
Yeah, more importantly, well, there's merchandising aspect of it, but the inventory, right? So who's supplying it? So there's these companies that are negotiating shelf space for the grocery store, right?
Mhm.
So there's all this going on. So the store itself has a buyer's agent. And what the store buys, it tries to buy things that, well, the customers will buy from the store,
Mhm.
right?
Mhm.
Yeah. So all this is going on. So one of the things that the store manager may look into, here's number one. If I'm working at the store, this sounds crazy. My first thought is I'm going to buy the store. And I'll just give you an example.
Mm.
You guys are thinking, what? Buy the store? What is that? $5 million, $10 million? Yeah, but a grocery store is a business that has real estate, and it's a very traditional business. You could get financing for it. It's probably one of the easier things to get financing for. You just need a team of people to help you, or a couple of people to help you through that process. So that's what I would look at as buy the store, or I would go look at the owner of the lot, the commercial lot the store is operating on, and see who owns it. Maybe someone else owns the land on which the store is operating, and I would start there. I would see about buying the actual real estate because the store is leasing the property. Now, if the store like Target, for example, I know I've done the research on some of these, Target, in many cases, in many towns, owns the lot on which it operates. Okay. So, there's that aspect. But what about a smaller scale? What about how the goods are purchased or supplies? What about investing in the supplier? Like, wouldn't you like to be the one that's selling the store the thing it's buying, right? Bread.
Mhm.
I want to do it. How can I get in there? How can I be the middleman? Now, you're probably not going to pull this one off. You're going to have to do something elaborate to do this, but here's just an example. You want to get in there to where there's already a sales function taking place, and I'm getting ahead of myself, but
Mhm.
already a sales function taking place, and you want to get into it with your money. And you can get in with small money. It's a low entry, and then you can roll it up. Because
Mhm.
what you're going to end up doing possibly is lending, okay, short-term lending, net 30, things like that, okay, net 30, 60, 90. So let me just share with you, let's see, okay, a couple of the basic consumer things, because again, I wanted this whole presentation is I want to have you understand some principles, because I can't go tell you, get that over there. I,
Right, right.
what I can tell you is the important things to consider, and so that you're not, and I'm not trying to insult anybody, but this is what my friends and I, that's how we talk to each other, okay? Don't be a stupid consumer. We say this to each other, okay? Don't be a baby, okay? So one of the things you want to consider is, let's say you just got a windfall from an inheritance. Most people think, I'm going to pay off the mortgage. Why does the bank get to be rewarded with an 82% return on capital just because you want to sleep better at night and not have a debt? It's just stupid. Why would you put a big lump sum of money onto paying off a mortgage and then put yourself in a possibly a higher tax bracket, pay more taxes, and then be out of your cash just so you don't have a mortgage payment? And now you've got all the risk on not even an asset. You've got all the risk, you've got all your cash tied up in a liability.
Mm.
Think about it. All right, so what I tell people is don't pay old debts, but continue paying your necessary living expenses. The mortgage is an old debt. Now, if you owe your grandmother money because she lent you 20 grand, you got to pay her fast. Okay. But if it's the bank, no, the bank already agreed to financing terms. Try to stick with those because you probably shopped around for a good interest rate, right? Why in the heck would you pay it off early so the bank can make 20 times its interest? Because that's what will happen. And I'm not going to get into that on the net present value and all that. You guys can learn that yourself. Just trust me on that one. The bank's making a nice windfall if you paid off early, especially if you're only like a third of the way into it. Oh my gosh. And then, like, my other rule is don't pay large debts in advance. A debt that you have, keep it. You already got the financing. This is great. Now, understand the difference between assets and liabilities. An asset is something that pays you money on a regular basis. I'm just going to say, you guys can come up with little nuances in there, but basically, if it's not making you money, gold is not an asset, but maybe it's a liability. I don't know. It depends on how you're storing it, how you're using it. The ownership or the holding of gold in place of cash could be a benefit. Okay. It depends on how you're doing it. Well, I'm not going to get into the details on that one, but there is a difference. So understand that your house in which you live is not your asset, but it may be someone else's. And probably it's the asset of all who are lien holders. Shall we go through the list of lien holders on your house? If we all understand the mortgage lien holder, do we understand the HOA covenant? It's a lien on your property. Do we understand the code compliance? All the regulations create a lien on your property, on the title to your property. The tax collector, one, right? Your insurance. These are all lien holders. Okay. These are all organizations that are seeing your house or on the books of those organizations. Your house is an asset for that organization. So it ain't your asset, but it's somebody's. It is your liability. It's just how we do. It's okay. Just understand what it is. Same thing with a car. I mean, shoot, our car's a huge liability. You want to use cash to buy something that makes regular income. So I'm trying to go over my notes here. Here's the examples I want to give you. So it could be a business, it could be a share in a business, or it could be the sales function. This is the best thing, okay? You want to own or benefit from the sales function. So many people think that a high income is a good idea, which, okay, it could be. Like a profession that pays a lot of money, okay, like a physician maybe, or an attorney or an accountant or some, high billing rates, hourly billing rates. Okay, it's a good thing, but that is not what makes the most money. If you want to make the most money and you want to make more than lawyers, for example, you want to make more than doctors, you got to be in sales. Sales makes the most money. Have y'all ever been into a car dealership where, not to insult car dealer salesmen, I mean, we need them. Sometimes they're annoying, but they're not the smartest people, but they don't have to be. And you know what? They're probably making more money than you, and they're not that smart. They don't have to be. Now, some are pretty smart. I'm just saying sales makes the most money, and you can be good at sales. You can spend a career learning better sales techniques. And so you can be really good at it, but sales makes the most money. So here's an example. The first thing, and this is what I recommended today earlier on a call, is get into something that's already making money. So for example, what's making money? Well, go to the grocery store, go to Walmart and hear ding, 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 ding. Every time I walk into Walmart, I'm like, damn, I wish I had a penny every time the damn thing was dinging, right? Because so my thinking is like no time in history. I wasn't able to do this when I was growing up. I wasn't able to do this when I was in college, just after college. I wasn't able to get a piece of retail sales in my neighborhood from a retailer. Even Walmart didn't have this available. But today, I can sell the same products that Walmart is selling. In fact, I can sell them in the name of Walmart and make money. And Walmart has a turnkey operation. It's pretty cool. Everybody should have a Walmart store. Everybody should be doing this. Everybody should have some interest, a function where you're spending money to buy consumer goods, you should also be selling the consumer goods. Now, I was making fun of somebody, like I told you guys before, I was making fun of somebody, these kids, they're buying paper towels, you know, from Amazon, and they get shipped to the apartment or whatever. And then I caught myself and I was thinking, well, what the heck? Why am I making fun of that person? I didn't even sell it to him. I should be selling it to him. The same thing is true with an Etsy or Shopify. Okay, so there's different ways to get into these things. Okay, so this is an online retail type operation. There are certain rules in these platforms. Etsy is a, you know, like eBay type of thing. Shopify, Walmart, these are retail sales. Okay, you get into them a certain way. You can purchase one that's already running. That's what I recommend. You want an investment with lower risk? Take an investment, buy a business, an investment, buy it from somebody who already took the risk, wrangled it into what it is now, and it's making 9%. Now buy it from him. He already did it. How's that for you? Now it's a pretty good bet, right? Maybe you'll screw it up. Maybe you'll make it better. But at least you're starting off with, you already know it's making money. Why is he selling it? They'll always tell you a story like, well, you know, I've got some other businesses and this has been in my way and it's the one that makes the least money, whatever. You know, you're never going to get the truth. Why are you selling it? So you have to do your due diligence. But there's some basic things to look for. So how would you know? I could tell you right now, but I'm not going to do that. What I will say to you is don't do this alone. So there's 3 groups here. I'm just saying the examples are online retail sales. Okay. Pick something that's already making money. If you're not sure and you want to get more, like have someone coach you on it. And I do this sometimes, but I also bring in a business broker in many cases. It's worth it to have a relationship with a business broker. Now it's hard to do that if you're just going to spend 10 grand or something. Okay. But you can work it. You can work it. Okay. Because you just don't be discouraged. Okay. A lot of times when you try to get into an investment, it's discouraging because you're thinking it's like going to the store to pick up a gallon of milk. It's not like that. It's almost like getting a mortgage. It's a pain in the ass. All right. And it's just a different mindset that you got to have. So everybody can do this, especially we're doing this from our computers. We don't have to go out and, you know, get dirty really, so to speak, you know? So that's one way to put some cash into something. Now, here's my thinking on the long term. Let's say this is a lot of money, $20,000. That's actually way too much money to put into an online business. I don't need that much money. I could get by with $8,000. That's still a lot of money. But let's say I put 20,000 into it. Maybe it's going to make, if I were to put 20,000 into an online business to acquire the business, I'm probably going to make, I'm thinking over $100,000 in the year, something like that. Okay. It's going to be something like that. Maybe it's 50, but I'm just saying it's going to be, you'll figure out the numbers. But the whole idea is that I'm not going to be happy with that because I know it's going to work. I'm going to make it work. If I can't make it work, I'm going to call somebody to confer with. I'm going to get hold of somebody that can help me solve a problem as I go. And my whole idea is just like the person I bought it from makes his books look good. I'm going to make my books look good. In fact, what I'm going to do is expand my customer base by identifying new niche markets that would want either products that I'm already selling that I haven't merchandised them properly, or I can add new products that I can sell to niche markets that I'm aware of that the seller was not aware of. And I'm going to make the balance sheet look better. Okay. Why? Because maybe I'm going to get financing later. I'm going to finance my money out of there, or I'm going to sell it. So in the next, let's say 3 years, I'm going to make profit on it. I'm going to make money off of it. And then I'm going to sell it. And I'm going to take that equity in cash and I'm going to go buy something else and continue it that way. So that's one example. And the reason why I'm saying it this way is because I want to relate to people that are going to spend under $20,000 or $10,000. You can all do this. Even if you have to borrow from your Uncle Bob, you can do this. And a lot of times these storefronts, these Etsy's and whatnot, you can get the seller to finance it to you. You can get the seller to take terms, is what they call it. You can get terms on the purchase price. I don't come up, you know, I don't say that first. Okay. So what I typically do is I make an offer to buy it, which is really a counter offer. And if my offer is accepted, or we get to an agreement on the to buy it, then there's a due diligence period where you're going to obtain your financing. Well, if you already have the money, fine, you're done. But there's a due diligence period where you obtain your financing. And that's when you come in there with the contract, the terms, the financing terms. And the first lender you go to is going to be the seller. This is another principle I want you to understand is you want to have financing, and your best lender is going to be the seller if you can work that out. And there are different strategies that I can show you. We can get into the details. I'm not going to do that tonight, but there are strategies you can use that would persuade the seller to finance to you. Okay. So another one is get into a share. Don't just own the whole business and take it all on yourself. Okay. You can do that, but you can also put cash into a business that's actually running. Let's say, for example, there's a restaurant that's been in your town for a long time that you've been to many times, and it could be a franchise, it could be whatever, but you just need access to somebody that maybe it's going to be an owner or somebody who has the authority to sell you an interest for cash. Let's just say you're using cash. That's probably the best example. So it's going to be like you're going to buy into a restaurant and you're going to get access to. So if you can negotiate this, you're going to get access to the financial records. Okay. And so you will see what the return on capital is. And so you put your money in there and you're going to get return on capital. It's already done. And now you're sharing the risk with the existing owner. Now you're really a partner, right? Let's see here. Yeah. So take your pick. I mean, look around town. You even got like these gymnasiums, right? Gym memberships. Here's an idea. I'm just going to throw something at you. So you see a gym operating, you like the gym. And so you think the customers that come in here, I mean, without even doing any research, they're just random walk-ins. They see the storefront driving by, okay? So you go talk to the owner. Maybe you buy them lunch, right? Is there no such thing as free lunch? There is free lunch. It happens. You buy the owner lunch. Why? Because you want to propose the idea that you want to bring more members to his business. Why? Well, I don't know. What do you want out of it? Maybe you want an equity position in the company. Maybe you want some referral money. I don't know. But here's your idea. With one sales effort, you go to a group of people in your neighborhood. The way you do that, for example, is the homeowners association. This can be done. Don't be discouraged. You can go to the HOA and say, hey, I've negotiated a deal with the local gym for all the neighbors. And here's the deal. All you have to do is within the next 30 days, Now, you're probably going to convert a lot of sales. Everybody knows what a gym is. You don't have to tell them. They're like, yeah, I'm getting kind of flabby here. I need to go to the gym anyways. I'm getting a better deal. Yeah, okay. So your name, you brokered that deal, right? So 47 people now become members of the gym, and then you get whatever benefits you negotiated. You guys should be doing this like, I mean, just once a year. I mean, if you did this once a year, it's just sitting out there, just waiting for you. That's just one example. Okay. All right. Let's see. And another one, like, there's so many examples. If you go look on YouTube, okay, you can find people teaching you how to use artificial intelligence to install applications on websites for local businesses that would alleviate the business's interaction with the customer on routine things like hours of operation, which we all know that can be posted on the website, right? But wouldn't it be nice to have an interaction with that person, and then the AI would actually be talking to the prospective customer to a point where the AI would set an appointment or set up a sales lead, right? Can you imagine doing that with like let's say a hair salon, okay? You install an AI application on the hair salon's website, where before it was like a dead website, right? It's like a billboard, right? But now you have an AI application and people start going there and it's entertaining, and you can actually talk, and then the person, now the person's conversion rate goes up. Instead of people just looking at the website like a billboard, now they're being pulled in, right? So this is something that you could do. And so it's a professional service, right? But it can also be almost like a joint venture, because you can get a share of the capital. You can get a share. So you want to get into the income stream. You're not just trying to sell stuff all the time, but you want to get into the income stream. So this is one way possibly you can do that. Um, and one example, which is really old and it's kind of hard to do these days because it's been monopolized, I'll just tell you, is be the lender on your retail business needs for buying supplies and products or whatever on net 30 terms. So the business will buy a product from a supplier. Maybe it's an art supply store, right? So it buys art supplies from the supplier. And then when it does that, it doesn't pay for them immediately. It waits for the bill 30, 60, 90 days out. And in the meantime, you can step in there as the lender, and then there's a discount rate, and then you get your return because you buy and you make money when you buy the note, the obligation, you make the money, the cash, and then that's how it works. So right now it's being monopolized. It's been like that for a long time, but you can find those deals on the smaller businesses, I think, with that are not franchised, big operations, big corporate conglomerates, national things, but you can find your mom and pops that might work out. Okay. Another thing to keep in mind is if you work out deals like that, it's not so much for the deal itself, but it's to establish a relationship. So sometimes, like, I'll even do something where I might lose a little bit of money or I might break even just so I can establish a relationship with somebody. Then we can make more money. Just keep that in mind too. Now that would be like what I just explained is like the second, getting a share of a business or a share of that sales operation or whatever. Okay. Now the last one, I guess, is, let me show you an example. So you probably can't see this, but I've got it on my desk here for the purpose of this call. But this is a flyer that I get. Okay. It just says everybody's business, etc. So if I look through this, I'm seeing all kinds of like 20 ads for this and 20 ads for this. And most of the ads for people that'll do repair work on your house. Most of it. Some of it's like a doctor or something like that, but most of it, it's I'll fix your windows. I'm a handyman. I do paint work, landscaping. So it's similar. So what I could do, I don't even have to talk to anybody. I could just set up a website like Angie's, right? And I could do a really much better job of than this paper thing that they put in the mailbox or whatever. I can do a much better job, and I can have a phone app. Maybe I'm going to piggyback onto somebody else's, and I'm going to reach out to the people in this neighborhood, and then they're going to come to my website. And maybe they think they got this flyer or they didn't get this flyer. But what I will do is I will use this flyer as my suppliers. I will get the customer, and then I will hook him up with the service provider in whatever way I'm going to do it. And I can make money different ways. I can have a membership. I can get a discount. I can get a referral fee. I can do all kinds of things, and it's already working. I'm just going to make it work better. That's another way to, I guess you want to call it an investment, right? It's a way to create some cash flow. If you have cash flow, I don't know if you want to call that an investment. Maybe it is, but maybe it's the prelude to an investment. I'm just showing you how you can create cash flow with, working with people. So like I was explained before, you can buy real estate with an options contract, okay? You can buy the real estate at a discount with an options contract. And then the whole idea is that you're going to sell it. This is not flipping. What you're able to do is make a legitimate offer to buy real estate, get an agreement in writing that allows you to sell your right to buy the property to someone else who's going to buy it. Okay. And then another one is, this is a very simple example, but affiliate programs. Affiliate programs are ways to make money by selling someone else's products. And I'll give you the quick example, which is a very minuscule example. My son, I set him up with an LLC, as you can imagine. And and I actually went to the bank with him and sat there and walked him through everything. And by the way, you guys, my son does not have an SSN, and he opened up his account with no SSN with an LLC. Okay. So, and he has an EIN. So, but anyways, for the company. So we got all that set up, and I'm listening to the teller explain the cost of keeping this account, which is like 15 bucks a month, which is ridiculous, but I didn't say anything. I just want him to experience that. So about a couple of months went by, and he says, "Hey, Dad, I noticed that the $100 I put in my account, it's like they're taking money out every month." I said, "Well, figure that. what happened? And you know, so then he's laughing and I said, okay, so that they bill you $15 a month just for having this service. So he goes, well, I know you're not going to give me any more money because you told me you're not going to give me any more money. So he goes, what do I do? I said, well, sell something and take the money from the sale of it, that what's left over, and put that in your account so you'll keep the money going, so you keep some cash flow. And he goes, well, I don't have anything to sell. I said, I didn't sell something you have. I just said sell something. So he's like thinking. And he goes, okay, well, I said, go look and see what you can sell. Go on the internet and find out what people are selling and see if you can sell those things. It's an affiliate program. And he goes, well, how would I do that? How am I gonna? I said, you figure it out. I didn't even go through that. I let him figure it out. And I said, I'll just tell you this one thing. You already have a PayPal link to take payments. Good luck. So it was like a month later. He's telling me, okay, I did it, Dad. I did it. I figured it out. I'm making money now. So, you know, children will, and children, I'm just saying, we're all there. Okay. I'm a child sometimes, but if we're new at something, we're children. Okay. And so even with the person I'm talking to today, maybe he was 45, I don't know. But he's never made an investment in all those years, never made an investment, or at least he doesn't know that he did. I mean, he said he didn't. So, okay, fine. So that's okay. You can start as a child, childlike, it's okay. But these are the basic principles. And I know there's like 100 more, and there's so many smart people out there that if you want to, you know, read their books and stuff like that, I'm just telling you from what I'm looking at and the people I interact with, it's always the you know, the person who has a day job and maybe he's speculating in cryptos or something, or maybe he's betting on gold exploding against the dollar. And, you know, that's not really an investment. That's hope. An investment is you put some money down or put someone else's money down, you buy something that makes money, or you work with somebody that's making money in a sales process. And then you're going to get into the business of, you're going to make an investment for somebody else, is how I look at it. Right. So you do this for yourself, but you always want to do it from someone else's perspective, like as if someone's watching you, right? So maybe someday you're going to sell the thing you're putting all the work into acquiring for your own benefit, the investment you're building, you're acquiring, so that someone else can buy it and will like it more than you like it now. That's how I like to think of things. I'm going to make it better. If I'm always thinking like that, then I probably will. And it's going to pay off really well in the future. Hopefully, you know, nothing crazy happens. So anyways, that's what I wanted to share with you. I know that was 45 minutes. Shoot. I hope that's okay. But there's some basic principles there. Understand liabilities, assets. There's some, you know, don't pay off old debts. Pay it off on the terms you have. Don't, you know, give free money to the banks. They have enough of that. And then look around and see what people are already doing.
Mhm.
Yeah, like this flyer thing. I mean, you know, think about it. You could, you know, you can make it way better.
Good
Hope,
call.
hope, yeah,
Yeah.
hope it
Yeah,
gives
I
you some
like the one
ideas.
on buying. I like that of buying businesses on terms. That kind of
Oh,
like goes along with the real estate stuff.
oh,
Laundromats and car washes. You talked about this a long time ago, and I actually looked and saw where people were doing it and approaching them just right, and then they would actually finance it. Like you would just return their revenue to them, like say 50% of profit would go back to them until paid for.
yeah, and I make the offer to the seller, and if the seller hesitates, I ask him if he thinks his business is a bigger risk than he's explained to me.
Uh,
That's how I kind of get him into accepting sellers'
mhm.
financing terms. If I offer him, you know, ask him for financing terms and he doesn't, he hesitates, then I ask him, well, why? Don't you think you're going to get your money? I mean, it's a pretty good opportunity, right? Or not? Is there something you're not telling me?
Mm.
Good response.
You
Mhm.
always make it to where the the price of the thing you're going to get can be paid for by the income within a short enough period of time that it makes sense. And I say it should be, if you're buying an online store, it should be 3 to 6 months. If you're buying a retail, maybe it should be 2 years, maybe 3 or 4 or 5 years, maybe 2 years. The less time the less time, the better for the newer person doing this, okay? That means less risk. So if it takes less time to recover your capital that you spent, then it's a lower risk. And if you do that, then it's harder for the seller to give you a good reason why he wouldn't finance it to you if I'm going to be able to pay off the price of the business in 3 to 6 months of its gross income or net income, however you want to negotiate it. Are your books accurate? You know? All right. Any questions? Ideas? Have y'all tried anything like this? Yeah, business credit. I mean, you can get into business credit. I mean, what's the idea behind that? I mean, if I get into business credit, okay, so what am I going to, first of all, let's start with, let me just get into this. What am I going to use business credit for? I'm not going to use it for buying real estate. I'm going to use it for one of two things generally. I'm going to use it for operation costs or marketing. Which is better? If I'm going to borrow money, Moko's trying to think about it.
Marketing?
Yes, ding ding. That's my, I would agree with you.
Because then if you have a sale, then you can go get the stuff that you need.
Yeah. So why? Because yeah, it's going to return the money faster. If I pay off my operating costs, I know I'm going to pay my employees. I'm not going to make them work for free, but I'm not going to pay for inventory. More inventory doesn't make me sales. In fact, I'd rather make sales, and I've done this before. I'd rather make sales with no inventory and ask the customer if he'd be kind enough to wait. I did this one time. One time I did this, I just did a test on I made a t-shirt on a thing. And what I did is I called a company through Alibaba in China because it was the easiest thing to do. The supply chain was pretty good. This is about 15 years ago, or no, like 8 years ago. So I get this deal where all these suppliers in China that make these t-shirts that are shipped out to the States, they want you to buy like 40,000, and I wanted 12. So to get 12, and here's my plan. So to get 12 t-shirts to sell on eBay, why 12? Well, I just wanted to demonstrate something to everyone. That's what I was doing. All right. So to get 12 t-shirts, I offered to buy them at retail or higher. I'm not trying to make money. I'm trying to demonstrate something. This is how sometimes you get started. Okay. So because I'm also testing the market. So I got the image of the t-shirt to approve it. So I got someone, I found one. I had to shop for like 8 of them. And I found one that said, okay, sucker, I'll do that. So this guy, he did exactly what he said. Now I took the approval image and I made that my listing image on eBay. I literally put it on eBay. And then I listed it for sale. I didn't order from the guy until I did get an order. When I got the order, I told the customer, we're on back order, but I'll ship it to you as soon as it comes in. It was my only order. So I ordered them. I ordered my dozen, which cost me, a lot of money. And I got it in the mail and I repackaged it and I shipped it to the customer and he was happy. Actually, he actually sent me a note back saying, thanks so much. Got it. Looks great. And that sort of thing. So that's an example because people say, well, I don't have the money for inventory. I don't have financing. Well, that's how you do it without money. I mean, yeah, I had to come up with a little bit of money. I could put that on my credit card, which I probably did. And, I did not make money on that transaction. You're not going to. Now, what's really shocking is, I meant to mention this earlier. What's really shocking is I'm talking about this now. You've probably never heard of this before, but I could tell you, if we go back to like 1995 or the year 2005, 3 to 5 years before your business makes money is normal. And the owner doesn't get to take 25% of the gross income home unless he's doing really well. Okay. So keep this in mind. With the new way things are being distributed and sold through online marketing and all this stuff, it is common practice for the owner to take 80% of the gross revenue and to start making a profit in 3 months. So the reason why I'm saying that to you is because don't think that the numbers are exaggerated or false if you see these types of offers, if you understand, okay? But a traditional business, like if I have a large capital outlay for a real estate place, like for example, an out parcel where it's built to suit, and I have to build, you know, a Walgreens, I put a lot of money up there, right? So that will take me 5 years to recover if I'm lucky at that, right? But it's a Walgreens, you know, or a CVS or whatever. But for an online store, we're spoiled. We can make money in 3 months, 6 months with almost no risk. Okay. All right. 50% cap. Yeah. Okay. So yeah, I mean, 2 to 3 years. Okay. So 2 to 3 years to make your money back is telling me that's actually a lower risk purchase. If it's taking longer to get my money back in a brick and mortar, for example, and it's a traditional type business, that's probably real. But when it comes to online, if it's taken 2 or 3 years, okay, maybe I'm paying too much. But maybe I have to pay too much because there's too much competition for this type of business. If I'm running into a situation where there's too much competition, meaning there's other opportunities that are so similar to the one I'm looking at that I don't want it. You know, it doesn't matter if what we call the market saturated. I don't care about that. What I care about is too many similar opportunities. I want an opportunity that doesn't exist anywhere else. And I also don't want to ever get into a bidding war with somebody. Like, and some people, they lie to you. Like if, you know, the seller is going to tell you, well, I got two more other people that were asking about this, so let me know if you want it. That's probably not true, but just keep that in mind. But I don't like to get into a bidding war with anyone. Let me see here. Yeah, so if you're looking at brick and mortar, it's nice because it's traditional, it's bankable. Okay, lenders like it. It's real estate. All right. Possibly it doesn't have to be because you can buy a sandwich shop that you don't own the real estate. That's okay. I think it's better to own the real estate, but okay. But yeah, and what I would recommend is talk to a broker that's your own broker. Now there's transactional brokers that work both sides, but there's also brokers that represent your interests. So, you know, you can work it however you want, but the broker has access to resources that you never heard of before. Like, I'm sure you've heard this term, but forensic accounting. A broker would know when that's appropriate and have access to the people that can do it. Most of us don't. That's another reason to use a broker. Another reason to use a broker is because the broker may have some best buddies who are lenders and they're commercial lenders. So we can go on and on about that. But anyways, my whole idea here is to give you some principles and, you know, let you see how it's done. This is how it's done. I don't know what other sources, there's pretty good information out by other people that, you know, they're entrepreneurs and they share with you how they do things. I'm just going to share with you how I've done things and how I coach people. So, and how do you find a broker? I mean, though he used to be the yellow pages, right? If you want to contact another business, you go check the yellow pages. I don't know if any of y'all know what that is. But today, what do we do for sources of information? What are you going to do? Go knock on your neighbor's door? No, we're going to go on the internet and search for it, right? On keywords. So keyword search business brokers. What type of broker do you want? Online business broker, brick and mortar. Talk to a commercial real estate agent. Commercial real estate agent. If you're connected into insurance, talk to some insurance agents. Right? Yeah, you can look at the capitalization rate. Yeah, you can look at the cap rate. Yeah, I mean, I'm not gonna get into all the tech details. You guys will run into this stuff. My partner and I, we used to go, we used to go looking at real estate to buy something, you know. We bought a duplex. And this guy was some sort of evil genius. I mean, he was really good at math and he appeared to be a complete doofus. And he just appeared that way. He was very silly and very like goofy. But when we were looking at stuff, he would be like the savant. He would ask the seller a couple of things and he'd go like this. Okay, the cap rate is about 3.7. You know, whatever. And I'd say, well, how'd you come up with that number? He'd say, I don't know, I'll show you later. So he'd go back to the office and he runs the numbers and the cap rate's exactly what he calculated in his head. So that's another way to determine if it's a, you know, something worth getting into. So you guys can learn that. Yeah. Gross rents is another example, but anyways, I'm not going to go in. You'll get into those terms, but and also the last thing is really just have some fun with it. It's a lot of fun. It should not be a job. It's really fun. And yeah, it's stressful and you worry, but that's okay. It's worth it. You know, because think about, if you're gonna take the effort to become an investor, you're gonna enrich your life in many different ways. Yeah, you'll probably make more money, but you also enrich the lives of other people. I mean, how many times do you enjoy walking into like a Panera breakfast for breakfast? Some limited partnership set that up for his family, and you get to go in there and have a nice breakfast. You know, it's nice. It's how the world works. So we should all be doing things like that. That's how we should be thinking, you know. You guys are so quiet tonight. You scare me.
Ooh,
Maybe you already know this stuff. You're just saying, what? John's
Uh,
finally figuring this
th-
out.
This is over my head so much.
Okay, let's say that there's 5 other people that think the same way, and you really want to do it. Start talking to people that maybe think kind of like that, and maybe you can work something out with them. I don't know. You can't do it alone. So work with some people. I mean, look, here's a simple thing. If let's say I want to make everybody you can talk, you can persuade others. Why couldn't you make one sales effort to bring in new members to your gym by talking to the HOA board or the neighbors that would, maybe at your expense, send a newsletter to all the homeowners? Okay, so there's a little expense there, and it's a sales letter, but you made them a smoking good deal at the local gym. You can do that. What is that going to make you? Maybe it makes you $300. Maybe it makes you $3,000. And if you did it once,
and a free membership.
yeah. I mean, okay, so you want a free membership. Okay, you think small. All right, fine.
No, and a free membership.
Yeah, all right. I mean, there's all kinds of things you can do with, just think about it. You can sell a thing to a person, or you can sell a thing to 47 people or 500 people by the same sales effort. This is what I asked my son. I forgot to tell you. I asked him, I said, so with the effort it took you to make the money, like I told you, you went and found, I don't even know what you sold. He told me, I forget what it was. I said, how much more effort would it take for you to sell that same thing in the same way to 50 other people? And he was thinking about it. He's like, not much effort. I said, well, then why didn't you do it? Not much more effort. There's not much more effort to sell to 50 than there is to sell to one if you do it with a strategy. So if it seems overwhelming, what are you really doing, Elaine? If you want some more cash flow, sell stuff. Leverage your time, sell stuff to a group, sell a thing that you know people want. Okay. All right, I'm gonna go. All right, so is that okay? Okay, I'm gonna chat with you in a second, okay? You gonna be available?
Mhm.
All right. All right.
Thought-provoking
Thanks,
call.
John.
Very good.
Thank you
Yeah,
very much.
excellent.
Thank you.
Well, thank you.
Thank you.
Have a good weekend, y'all.
You too.
Thank you.